Hello and welcome to the Business Standard Morning Show. I'm Binu Sandhu. It's the 15th of September 2023 and here are the questions we will be answering today. Will India see the best Diwali sales ever this time? Why can't BCCI take care of cricket fans? Is the small cap rally ripe for correction? And what is the Matsya 6000? With headline inflation easing to 6.83% in August and the festive season almost here, companies anticipate healthy retail sales in the coming months. The shopping spree typically begins in October and extends beyond New Year. So how well will the brands manage to capitalize on the festive fervor? Kasturi, Akhil and Ashutosh Mishra find out.
With the festive season around the corner, brands are already bracing themselves to cater to the soaring consumer demand. In a recent interview with the Business Standard, Russell Grandinetti of Amazon said that the company is expecting this year's Diwali to be the best in terms of sales. In the previous festive season of 2022, over 1.5 million new customers shopped from Amazon Fashion and Beauty. The orders for Amazon Fresh, which offers groceries, grew by 29% versus 2021. Last year, the e-commerce giant said that it witnessed the largest ever participation from sellers and brand partners during its Great Indian Festival sales. Categories like electronics, fashion, beauty, and home products garnered the most consumer attention. A recent report by Team Lease Services shows a striking expansion of the gig economy during the festival season this year. Gig-based jobs are expected to rise as high as 7 lakh from 4 lakh last year, largely due to the burgeoning e-commerce industry. Needless to say, the numbers suggest that Amazon's foresight regarding this year's Diwali sales might just turn true.
I would say this year is kind of unique in a sense because, for one, it's the first, technically it's the second year after the COVID pandemic is firmly behind us. The markets are peaking, the pandemic is completely behind us. There's a general buoyancy in the economy, in terms of employment numbers are up. So I would say this year really can be very, very positive. If you look at the GST trends as well, GST collections have peaked. So I'm not surprised at all that this festive season could be the biggest for all players, including the e-commerce majors.
Every year, sales majorly perk up for companies around Diwali. And to make the most out of this, brands come up with attractive offerings. This year seems no different. Recently released Consumer Survey Index report by Access My India suggests that 23% of people anticipate an increase in festive shopping. Further, around 44% of those surveyed plan on spending more on e-commerce platforms this year as compared to last year during the festive sales.
What happens during festive is, again, as I mentioned, you can't compare festive to annualized growth rates because the mood and the sentiment is kind of positive to actually buy more things online, buy high ticket items online. And we have seen, iPhone getting launched recently, a lot of smartphones getting launched, OEMs are there. And if you know, a lot of these e-commerce platforms are very heavy for white goods, which are high value nature. So I think basis that you could see a growth. You could see a growth primarily because of better discounting, bigger sales being pushed, and the festive season mood being upbeat.
One of the segments that witnessed a jump in sales, particularly at the onset of the festive season, is the automobile industry. Federation of Automotive Dealers Association, in its August report, revealed that inventory levels for passenger vehicles have already surpassed the 60-day threshold, even before the festive period sets in. Moreover, the sale of passenger vehicles is expected to top the 1 million mark this festive season, as told by Maruti Suzuki's Shashank Srivastava to PTI. According to Srivastava, festive season-driven sales typically account for around 22 to 26% of the industry's aggregate sales in a year. Consumer sentiment for electronic products also seems promising. A Counterpoint survey found about 85% of the respondents were interested in purchasing products like air conditioners, refrigerators, laptops, etc. of which smartphones topped the list with more than 50% interested buyers.
I think premiumization is a trend that we have to be looking out for across all categories, especially if we're talking about smartphones, where what we have seen is that the market is declining year on year if we talk about the overall market. But the premium segment, that is the phones that are selling for above 30K, they are increasing by almost double every month. With the premiumization trend happening, people tend to go towards offline channels if they're buying a premium product, because they want to test the product, they want to feel the product.
Experts point out that even though companies seem optimistic about the festival season ushering in a spike in sales, the uncertainty around a continued uptick in inflation amid elusive rainfall still remains. Provided things fare well on the macroeconomic front, the growth momentum in sales is here to stay.
For some, the celebrations will begin early. The Cricket World Cup is close and fans are waiting with bated breath to see their teams go all out for the trophy. But the management of the first solo hosting of the event by India hasn't exactly been smooth. With many fans unable to book their tickets for the matches and poor stadium experience of the past, the question arises: why can't the Board of Control for Cricket in India, or BCCI, take care of its stadium-going fans? Abhijit Kumar looks for the answer.
With the World Cup Carnival less than a month away, the excitement among fans is building up. But the apathy of India's cricket board towards its stadium-going fans has marred the enthusiasm of many. Recently, fans took to social media to express their frustration over the lack of tickets for the matches. Fans have complained of tickets selling out on short notice, not receiving confirmations of their purchased tickets even after payment completion, and settling for seats they did not opt for.
See, ultimately, the fans at the grounds, people who will buy tickets and come into the stands, are not part of the BCCI's bottom line, because the money that the board makes is through broadcasting rights and through TV and through internet streams. The board knows even if they make people sit on hot concrete, people will still come. And because people are not in a position to demand anything better, the board does not give them anything better.
The discontent became evident in the wake of the hasty changes in schedule of the World Cup matches recently. The BCCI had won the rights to host the World Cup in 2013. But the board waited till June 27 this year to announce the official schedule. Soon after the announcement, the Gujarat police reported to the BCCI that it may not be able to provide ample security for the India-Pakistan match scheduled to be played at the Narendra Modi Stadium in Ahmedabad on October 15th. The match was clashing with the start of the Navratri festival. As a result, the match was moved to October 14th. 8 other matches also had to be rescheduled to accommodate the change. This all happened just weeks before the ticket sales went online. Compare this to the 2011 World Cup, jointly hosted by India, Sri Lanka and Bangladesh. The match schedules were released as early as in November 2009, and tickets for the event went online nearly 10 months before the event. So despite being the richest cricketing bodies in the world, why has the BCCI failed to provide world-class experience to its fans?
Being the richest does not mean you are the most professional organization. So it's like more of a political situation than the cricket administration. We had ample time, but the participation of Pakistan, whether they are going to come here, after we boycott them or after we force them to go, hybrid, playing India matches in Sri Lanka, there were a lot of confusion.
After the ticketing fiasco, the BCCI announced that it will release 4 lakh tickets in the next phase of ticket sales to accommodate fans. But this is not the only issue that has marred the experience of Indian cricket fans. Stadium management is least of the BCCI's concerns, many allege. While stadiums in countries like Australia and England offer amenities like Wi-Fi connectivity, family zones, and gourmet food options, many Indian stadiums still lag in basic amenities. Many cricketing venues in India lack proper seating arrangements, restroom facilities, and basic amenities like clean drinking water. And on a match day, long queues for snacks and refreshments are a given. Insufficient parking spaces and overwhelming traffic only exacerbates the problem. While all these problems have existed for years, why has India's stadium management remained neglected?
Like in Australia, let me tell you, the spectators, if you are sitting in, say, balcony A, and there are A to Z, entire balconies, you can actually move around the entire stadium. The problem here is mostly these are very compact stadiums. There are barricades everywhere. And the major problem that everybody, faces there while watching a match is the police or the security agents. In the name of security, they put a lot of, issues or a lot of problems they create for the spectators.
And is there an immediate fix to this challenge?
Has to have an autonomous wing which is looking after customer comfort, which is auditing all the grounds, the kind of food you get at grounds, which is trying its best to make the tickets process paperless, which is liaising day in and day out with security at the ground so that the people face the least problems while entering the stadium or exiting it.
Cricket veterans believe that there is a need to change the administrative structure of the BCCI before these issues are addressed. More democratic state cricket boards with better autonomy might help in mitigating these issues faster. But when will that happen remains an uncomfortable question.
It is not just cricket fans. Dalal Street investors too are a happy lot these days. The broader markets rally, especially in small caps, has left several analysts stunned as they believe it is being driven by euphoria rather than growth levers. Amid concerns of the broader market being overheated, will this rally take a breather? Harshita Singh finds out in our next report.
Indian equity markets have demonstrated a stellar show this year, and small cap stocks are the clear winners. The BSE Small Cap Index has led the broader market rally in 2023, with gains of over 30%, more than double the 11% gain in the Sensex benchmark. With a faction of analysts highlighting the need for caution, the small cap as well as the mid cap indices witnessed what some believe the first signs of exhaustion this week. The BSE Small Cap Index lost 4% on Tuesday, which was its sharpest single-day decline this year. Analysts believe the broader markets, especially small caps, might be ripe for a correction in the near term.
So such drastic sell-off has not been witnessed in the last 6 months, where we saw a strong up move in both the indices. So sharp sell-off which indicates a caution on an ongoing trend, and we may witness some further decline going forward. So it would be prudent to stay very selective on the stock front and to avoid such stock which has risen sharply in recent times and does not favor risk-reward favorability, especially in the small cap index, which has rallied more than 40 to 45% in the last 6 months. Now we believe it may take a backseat and underperform the benchmark index in the near future.
As per analysts at Kotak Institutional Equities, the broader market rally is not backed by fundamentals, but irrational exuberance among investors with high return expectations, given the rally in the past few months. Latest data also backs the euphoria in the small cap universe. Among individual stocks, J. Balaji Industries has vaulted over 500% so far in 2023. Zen Technologies, Jupiter Wagons, Jindal Saw, and Titagarh Rail are some of the counters that have surged over 200% during this period. From a technical viewpoint, of the 250 small cap stocks listed on the Nifty Small Cap 250 index, 224, or nearly 90% shares, were holding above their respective 200-day moving average, or DMA. While a price above the 200 DMA generally signals bullishness, it can also be seen as a contrarian indicator in an overheated market, leaving room for profit booking. Amara Raja Batteries, Balrampur Chini, Glenmark Pharma, GNFC, and PVR Inox are trading up to 54% higher over their 200 DMAs. Hence, charts suggest the small cap index could slide to its support zones in the near term.
It may further decline towards the strong support area. So on the level front, a small cap index has a strong support placed around 11,800 to 11,500, where it may consolidate or it may find some cushion on the downside. Whereas on the higher side now, 12,800 to 13,000 will act as a very strong hurdle.
Thus, investors should exercise caution as the fresh surge in crude and food inflation are key near-term risks, which could trigger a sharp retreat in the broader market. Today, on September 15, global market reaction to the European Central Bank's policy decision will guide Dalal Street.
He's making plans for an early retirement. Business Standard.
After reaching for the moon and training its eyes on the sun, India is now looking to explore the depths of the ocean with its Samudrayan mission. The Ministry of Earth Sciences recently unveiled Matsya 6000, a cutting-edge submersible for this underwater endeavour. Sanket Kaul has more.
The Matsya 6000 is a spherical submersible designed to carry 3 people at a time to a depth of 6,000 meters for deep ocean missions. It will have a total surface area of 13.84 square meters. Matsya 6000 has been developed at the National Institute of Ocean Technology, Chennai, as part of the Samudrayan mission under the Ministry of Earth Sciences. The Samudrayan mission is the first manned deep ocean mission of India. It will allow transport of humans to depths up to 6 kilometers in the submersible. Matsya 6000 will enable direct human observation in the deep ocean. It will aid in exploration of mineral-rich resources in the ocean such as nickel, cobalt, manganese, rare earth metals, and sample collection for further analysis. To handle excessive water pressure, Matsya 6000 has been constructed with titanium alloy with 2.1 meter diameter. The submersible will also have a normal operational endurance of 12 hours and a system that can last up to 96 hours in emergencies to ensure human safety. The Matsya 6000 is scheduled to undergo sea trials in the Bay of Bengal off the coast of Chennai in early 2024. As per a written reply in the Parliament by the Ministry of Earth Sciences, the mission is set to be realized by 2026. Various private and government-sponsored deep-sea missions have taken place across the world. The most famous deep-sea mission was the US-based Challenger Deep mission in 1960, which traveled to 10,935 meters below sea level.
The nation's trusted bank, SBI, the banker to every Indian.
But a recent tragedy also highlighted the risks associated with such projects. In June this year, the Titan submersible had suffered a catastrophic implosion, killing all 5 passengers on board. Well, that's all for today. For more news and analysis, please log into our website, business-standard.com. Thank you for watching.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.